Are there really ever coincidences anymore at these levels? You know, the United States certainly is a very, very powerful, great country, but many of the nations whom are rallying against us using commodities as a sidestep to the dollar and the treasury market hegemony, they have a say in all this too. And to your point, the Shanghai Metals Exchange, as you and I have talked about on many occasions, is not only trying to gain credibility and have other countries store their metal with them. Remember, they're in the process of building multi-jurisdictional vaults all around the world, starting first in Hong Kong, now in Saudi Arabia, and then ultimately through the Belt Road. Now, China, the second largest producer of silver in the world, David Morgan will tell you when he went to China, they tried to tell him they were number one. So number one or number two, number one gold, yet they're flying all around the country, buying all around the world, Latin America, Peru, and Mexico primarily, buying doré, which are crudely refined bars, and concentrate, the byproduct of the mining process, directly from these players, disintermediating the market, right from the miners, disintermediating the market, and sending it all the way back to China on their expense, paying double what the West will to refine it themselves. These metals are becoming very critical to them. So yeah, why wouldn't they want this to happen, to allow the price to go much higher? And how do they do that? The same way I've been saying this since the first interview you and I did together years ago. They're draining the exchanges slowly and methodically. They're standing for delivery in London. The London Metals Exchange has the lowest amount of silver, the float, they've ever had in the 140-year history of the exchange, at least since they started keeping records. And so they have been using the idiocy of the Western suppression system to beat us at our own game. The part that most analysts and most naysayers have a hard time justifying when we say this is that they haven't done it like that. Everyone in this country expects instant gratification, and if it's not fast enough, if it's not immediate, it ain't fast enough. That's their genius. Slowly enough to not rattle the bushes. But they've done a yeoman's job at that. Look at the countries involved. Saudi Arabia, China, yeah, they're all accumulating silver in their own way as fast as they can, but also gold, not too fast. And many of the other nations are too. So yes, this would indeed, and the mistake that we make in this country is thinking that we are omnipotent and we have the ability to control everything. And you know what? As I've said with you before, these countries are now sophisticated, coordinated, motivated, and they have a plan that is methodical, a plan that drives the analysts in the West nuts because it's not in your face, bang. No, but take a step back. It's just like the title of my show, little by little by little by little by little, and then bang, all at once. And we haven't seen the all at once moment, but is this the beginning of it? Maybe, could be, don't know. But absolutely, to your point, this would benefit not just China, but all of the BRICS nations. To say that they have a hand in all of this and to poo-poo it and say no way is as naive as a mud wall. It's absolutely, I think, very plausible that the Chinese have not only interest in seeing this, but are understanding that their actions and slowly exacerbating it ultimately is to their best interest.
Is there a way that China could physically help engineer the squeeze?
Yeah, by standing for delivery all around the world. And that's what they've been doing. I believe that they have been involved in shorting the paper price as well, because if you can't beat them, join them, and then going all around the globe in places like London, in places like Shanghai, all around the globe, including the miners directly, disintermediating the marketplace and pulling silver inexpensively at a subsidized price because of the futures leverage, because of the suppression, and buying as much as they can, anything that's not nailed down all around the globe from centers that do not trigger price discovery. It's the COMEX that triggers price discovery. And so they're using the suppression of the Western paper market and probably adding on to it in an effort to do exactly what we're talking about. Slowly, instead of suppressing the market for other gains, political or militarily or whatever it may be, dollar supremacy, bond market supremacy, pick your poison. They're doing it because they realize we are entering a period of time where commodities will define the strength and legitimacy of a nation. And those commodities are not just going to be gold and silver and platinum. Platinum is another example where the head of the TOCOM, Bruce Ikamoto, or I'm butchering his last name, but Bruce, the head of the Japanese TOCOM, says they're trading over 3 million ounces of platinum a day in London, but in, as he says, local, meaning location, London and Switzerland, 0 ounces available. What could possibly go wrong if you're trading 3 million ounces of deliverable spot contracts a day against nothing? And the same thing is true in London. What could possibly go wrong when you have 140 million ounces with 2 billion ounces in contracts out there that could stand for delivery, not to mention the 600 million you're trading per day? What could go wrong? The Chinese slowly played this game and buying it all around the world, including London, and they're achieving it by using our stupidity, our hubris, our suppression against us. Now, there will be some metal that will go back to London. There are a lot of players in that market, and some don't see the big picture. Some want to capitalize on the arbitrage. To the extent of what you're reading in Bloomberg, there is some truth to it. But on a big level, I don't think you'll see more than 5 or 10% of the metal that's shot back here go over there. And it will just be a few players trying to arbitrage the big money who's been bringing in billions and billions a week in this stuff. I think they have bigger ideas and bigger plans for where silver is ultimately going to go. Let me say it one more time. The most powerful nation on the earth, the United States government, who really doesn't have much in the way of silver, who's importing billions of dollars a month, billions and billions and billions a week and month into COMEX and other areas that we probably don't even know about, buying directly from local and artisanal mines, has classified silver as a critical mineral. What does that tell you about what the U.S. government sees in place or has in mind for silver? These are the crumbs that a lot of people will just blow right past and ignore. To me, if you are a country who classifies an asset as a critical mineral, you're not going to let it all ship away. And so the majority of the metal that's come in under the guise and BS to that of tariffs and arbitrage, I believe has twofold implications. One, I think it was brought back to cover the short positions of many of the U.S. banks who are short in New York and long in London. They brought back their London metal to cover their shorts. And if I had to guess, had a gun to my head, I would say they've worked out a deal to deliver that to the U.S. Treasury under the guise of the Exchange Stabilization Fund to help build a stockpile of critical minerals and elements.
One of the things we really should talk about, because as much as metals have moved, one of the things that has happened is there has become an enormous spread between the bid side of silver and the trading price side you see quoted. And I want to explain that to you because if somebody calls us in today or tomorrow and says, Andy, I want to sell 2,500 ounce bars, and we give them a number, you need to understand why it may feel strange compared to what you're watching on your screen. Here's how it works. My dear friend Michelle McCrory just sent me something because I think it's important to understand. She sent me a note that says, Australia's Perth Mint has halted all silver product sales due to overwhelming demand and supply chain issues, while a U.S. dealer has frozen transactions as of October 13th, 2025. She quoted a publication saying the shortage stems from industrial demand in solar panels, electronics, and EVs outpacing mine production by hundreds of millions of ounces annually, driving spot prices above $50 per ounce and record premiums on physical bars. Experts highlight plummeting vault inventories and refining capacity strains as key factors fueling further price increases. Now, whether every single detail of that report is 100% verified, I can't guarantee. But what I can guarantee is that the trend is unmistakable and it's visible from many corners. From dealer emails to vault reports, the principle is clear. Physical supply is under serious stress. So here's the bottom line. If I buy back metal from people, I have to hedge it. If we have 1 million ounces in our warehouse and the price goes down by $1, we've lost 1 million. So I have to hedge to protect that. But what if I go and buy physical at, say, $52, and I try to hedge using futures contracts, and the futures contract is only trading at $49? The hedging cost is broken. I'm exposed. I either have to accept that exposure or reduce my volume, or both. That creates a situation where even if the headline spot price is, say, $52, the price at which I can liquidate or hedge might effectively be materially lower. That pushes down the bid side for someone selling large bars. It increases the spread between the price you see on screen and the price you net as a seller. When I talk to my suppliers, they're saying, we're halting trading until we get a handle on premiums, availability, and the spread. Now, a few people have reported refiners pushing retailers to buy back junk silver or sterling silver at 50% below spot. I will tell you, at least in our business, That's not true in our market. We're offering somewhere around $3 to $4 back from spot in some cases. That's still a big discount and unusual, but nowhere near 50%. So don't believe the worst-case rumor without verification. But also don't dismiss the fact that spreads are weird, premiums are high, availability is tight, and the system is strained. If someone asked me, should I move 1,000-ounce bars into smaller denominations right now because of this huge demand and premium? I'd say yes.